The conventional wisdom is that index funds and other ETFs offer plenty of built-in diversification. I mean, after all, an index fund that mirrors the S&P 500 represents 500 different companies, right? Well, sort of, but not as much as most investors think. In our new Bucks Outside the Box series, we are busting money myths and ripping up the conventional playbook for investing and personal finance. I'm Brian Davis.
And I'm Deni Supplee, and together we founded Spark Rental and the Co-Investing Club, and we question everything and want to help you do the same.
So, Denny, people assume that they get plenty of diversification by just investing in an index fund or two, such as funds that mirror the S&P 500. But it turns out that the S&P 500 has the diversification equivalent of just 59 companies.
Wait, what? Why is that?
Because stock indexes are weighted by market capitalization. So the biggest companies take up a disproportionate weighting in those indexes. The greater the total worth of a company, the greater percentage of the index fund that stock takes up. So that makes most index funds, such as funds that mirror the S&P 500, which is just an easy one that we're all familiar with that we can all talk about. It makes them extremely top heavy, with a few massive corporations making up a disproportionate share of the fund as a whole. So take the top 10 companies in the S&P 500, which, by the way, of course, that's just 2% of the companies in the index, right? 10 out of 500 is 2%. However, those top 10 companies, their weighting makes up 37.6% of the index. Apple alone makes up 7.5%, 7.5% of the S&P 500's weighting.
Do I even want to know how that compares to the companies at the bottom of the index?
Well, so it's totally nutty. The top 10 companies in the S&P 500 are weighted roughly the same as the bottom 450 companies. So I
Wow.
mentioned that the weighting for the top 10, 30, it's almost 38%, right? It's 37.6%. The weighting for the bottom 450 companies is also around 38%. It's 38.3%. That's why fund giant GMO found in their study in late 2024 that the S&P 500 has the diversification equivalent of an equal weighted fund with just 59 companies.
Wow. So, what are the action steps the unconventional investor should take so we can diversify the stocks? And then how can you add that diversification to your stock portfolio?
A couple ways here. So one, you can also invest in equal weighted index funds in your portfolio. So an equal weighted S&P 500 fund, for example, owns equal capitalization of all 50 companies or I'm sorry, all 500 companies in the index, regardless of the size of those companies. So each one makes up basically an equal percentage of the fund's weighting. So that's one way. Second way is you can buy small cap and mid cap stock funds as well. So, for example, you can buy funds that mirror the Russell 2000 index. That's another way.
What about geographical diversity? Is that something we need to worry about?
Yeah, so I'm a huge proponent of geographical diversification. People who disagree with that will be like, "Oh, well, overseas stocks have underperformed U.S. stocks, for the last decade," and that's true until it's not, right? I mean, there have been times in history when overseas stocks have done better than U.S. stocks. So we do recommend that you diversify geographically, so not just U.S. stock companies, but also foreign developed economies, such as those in Europe and parts of Asia, but also emerging markets as well. So you get a true diversification
Mm.
across the world. And because we happen to specialize in real estate, and we would be remiss if we never ever talked about real estate in this podcast and YouTube show, we also recommend adding private equity real estate investments to add to that diversification. So with private equity real estate investments, it's all hands off, of course, it's all passive, but you get all the benefits of real estate ownership. You get the cash flow, you get the appreciation, you get the tax benefits without the headaches of having to become a landlord. You basically become a fractional owner in large properties or large portfolios of properties.
And it's almost like you cued me to ask this question. Doesn't private equity real estate require huge minimum investments, like big time?
Well, yeah, almost like I queued you up for that, indeed. So, yeah, the answer is not if you go in on them with other investors, and that is, of course, what we do. Every month in our co-investing club, we get together as an investment club, and we look at different passive real estate investments. We vet them together as a club, and then we'll go in on them together, so each member can invest with $5,000 or more at a time, instead of the typical 50,000 or 100,000 that you normally need to invest in private equity real estate investments. So, quick overview here, or just a quick recap of what we covered. Index funds are heavily weighted at the top. That does not mean that you shouldn't invest in them. I have a lot of my stock investment money in index funds. So we're not trying to tell you not to invest in them, but you can counterweight some of those. You can counterbalance these by also adding equal weight funds to your portfolio, by also adding small cap and mid cap funds to your portfolio, and by adding geographically diverse funds to your portfolio as well, such as foreign developed economy funds and emerging market funds. And of course, add some real estate to really, really diversify your portfolio. Deni, anything else you wanted to add before we call this episode complete?
I don't think so, but I think this is a great idea for everybody for as little as $5,000 to really diversify your portfolio.
And, if you got a fresh perspective out of this episode, please pay it forward by passing this episode along to a friend, a family member, a colleague who might also get something out of it. Challenge the status quo, challenge their assumptions about this. And if you didn't get something out of this episode, email us and let us know what you didn't
Absolutely.
like about it. Email us at support@sparkrental.com. Let us know what you want to hear more about moving forward. And lastly, consider joining us in the co-investing club. We put our own money in these passive and real investments every month. So we look forward to investing alongside of you, getting to know you better at club meetings, and being on this financial journey with you and getting to the next level. So in the meantime, stay weird, unconventional investor.